you guys, welcome back to my channel where we talk about money making and money saving tips. In today's video, I'm going to be talking about taxes, about being a dual citizen and living in Israel, but also being a citizen of the United States. And I am not an accountant. Some of these concepts do also apply with other countries that have tax treaty agreements with the US, like Israel does. So if you are planning to move to another country, you should look into whether or not there's a tax treaty between the US and that country. The number one thing to understand first is that in the US, they will tax based on green card / citizenship status. They do not tax based off of residency status. However, most other countries, I don't know if it's all, but most other countries tax based on residency status. Now, residency doesn't mean what the layperson thinks it means. Residency is a legal term of art. It has a definition by law, and it is a fluid definition. It is not something that any one specific factor is dispositive to prove that you are a resident of this location over that location. It is a very fact-specific analysis on a case-by-case basis, and essentially by looking at different elements of things that would indicate where you are at home, that is how they assess where you are a resident. So certain things that would be analyzed are things like, where do you have bank accounts? Where do you have a home? Where do you spend most of your time, right? Anything that can indicate like where you are at home somewhere, like if your family is in a certain location and your like wife and kids are there, that's going to go in favor of maybe that being more so your home. But if you are separated from your family and you spend more of your time in a different location, then maybe that's not the case, right? So it's like a little bit fluid. It's not something that's exact science. Usually under Israel's rules, if you spend more than 6 months in Israel, by default, they will likely consider you a resident. You can still be considered a resident if you don't spend 6 months in Israel, depending on your other ties to Israel. But as a general rule of thumb, that's what people tend to try to go by. Anyways, so Israel will tax based on residency. If you are not a resident of Israel, you essentially don't need to report your taxes to Israel. But there are exceptions to this, right? So if you have income being generated from real estate held in Israel, you will still have to pay taxes to Israel on that income generated from real estate. But you can take a tax credit for what you pay to Israel when you report your taxes in the US. And so you're not doubly taxed on that when you file in America. The US is different. The US goes based off of citizenship, which also includes green card holders. So if you are a green card holder, if you are a citizen, no matter where you live in the world, you will have to file taxes in America, no matter where you live in the world, okay? If you are paying taxes to the other location where you live, like Israel, which has a tax treaty with the US, then you would take any payments that you have applied toward taxes abroad, in Israel, for example, and use that as a tax credit when you're filing in the US. So when I file my taxes to the US, I say, okay, this is how much income I made globally, right? Because the US wants to know all of the money you've made globally. And this is what I've already paid taxes on to Israel, and I take that as a tax credit so that it's a credit against what I would have otherwise owed in the US. So the US only takes taxes from me if they would have taxed me additional money beyond what Israel already taxed me. Or if I have income that wasn't reportable to Israel and I didn't pay taxes on that yet, then America would likely take taxes on that portion of the money. So essentially, I'm not being double taxed, but I am paying the higher of the two tax rates. So for example, if the tax rate is 40% in Israel, but it's only 35% in America, I am going to pay the 40% owed to Israel and I'll owe nothing to America, right? But I'm not going to get a refund from America for having paid more to Israel. And if the reverse happens and I pay 35% in Israel and then I go file in America and America's tax rate, let's say, is 40%, then they're going to want me to pay an additional 5%, or the difference in what I haven't paid to Israel, but what the US would require me to pay. So I'm not being double taxed, but I am paying the higher of the two tax rates. Now, another very important thing to note is that there is no such thing as a totalization agreement between Israel and the US. It basically means that if you're self-employed while being a resident of Israel, working in Israel, then you're going to pay the Israeli version of Social Security, which is called Bituach Leumi. And then you're also going to have to pay the American version of Social Security. And you're going to pay that at the self-employment tax rate on Social Security, which is the employer portion and the employee portion, right? So you're going to pay an extra like more than 15% in Social Security to the US when you're already paying Social Security or Bituach Leumi, right, in Israel. So it does take a huge chunk out of your taxes in additional Social Security. And as you know, you might not get all of that back down the line when you are paid out your Social Security benefits. And there's also like windfall exceptions, which might limit how much of your Social Security payments you might be able to get when you eventually reach the age of, being able to receive your Social Security payment. The thing, though, to bear in mind is that there is a provision in the tax treaty that says that neither jurisdiction is going to tax the other's Social Security payments, which means that if you get paid Social Security from the US while living in Israel and residing in Israel, you will not pay taxes to Israel on the Social Security payments, and vice versa, right? So if you receive Social Security tax payments from Israel, you're not going to pay taxes on that to the US either. So there is that in the agreement, which is at least something. Now, if you are someone who is going to, for example, be moving to Israel as an Oleh Hadasha, or like a new Oleh, a new Jewish immigrant to Israel, you will be likely qualified for certain benefits that you can receive as a new Oleh. And among those benefits include a 10-year tax holiday on any foreign earned income for the first 10 years that you live in Israel. So that means that any money you make from outside of Israel, you don't even need to report that to Israel for the first 10 years that you've now moved to Israel and living in Israel. So essentially, if your business is such that like you're working in Israel some days, but then you're traveling and going other places and earning money from abroad during other days of the month or year, then you wouldn't have to report that. Or if you have rental income that is coming in from a property generated overseas, you wouldn't have to report that. If you're a dual citizen and if you're a US citizen and obviously you're generating rental income from abroad or from anywhere else, you'd still report that to the US and you'd still pay the US tax rate. But it does end up being pretty beneficial because generally speaking, the Israeli tax rate is higher than the US tax rate, especially because if you're not living in the US, you don't have to pay any state taxes because you're not a resident of any state. And state taxes, unlike federal taxes, go by residency. Federal taxes go by citizenship, though, as I mentioned. So you're still paying federal taxes when you live outside of America, but you're not paying any state taxes. And the federal tax rate, I think the highest tax rate, federally speaking, is somewhere around like 35% for the highest bracket. But in Israel, the highest tax bracket is like 40% or maybe even more for the highest tax bracket. So generally speaking, if you have foreign earned income that you don't have to report to Israel and you are reporting that in America and paying taxes on that in America, the tax rate, even at the highest tax bracket in America, is going to be less. So it is still saving you some money, the foreign earned income exclusion essentially that you get in Israel for the first 10 years. If you're only reporting that to America and you're only paying federal taxes on it. Now, it's important to note, though, foreign earned income doesn't necessarily mean that the money just comes from overseas. If you are physically present in Israel while working for that money that's coming from overseas, Israel might still consider that to be Israeli earned income and not foreign earned income. But if you are traveling for work during certain seasons and you're getting paid from abroad, then that is very likely going to be considered foreign earned income and not reportable to Israel in the first 10 years after making Aliyah. Again, you'd still have to report that to the US and pay whatever the federal tax rates are to the US. Another benefit that you receive as a new Oleh coming to Israel is there is like a tax point credit system for the first 3 years that you live in Israel, where for every month for the first 18 months that you're here, you get 3 points of credit toward your taxes. And then for the next 12 months after that, you get 2 points. And for the next 12 months after that, you get 1 point. So I guess that's actually 3.5 years, not 3 years. But in essence, each point counts as like 219 shekel or something like that worth of money that you're not having to pay taxes on for that month. That's definitely very helpful as far as kind of bringing down the amount of money that you are paying taxes on to Israel. Now, one other thing to bear in mind is that certain tax advantage instruments in one jurisdiction might not then be considered advantaged in another. And what I mean by that, for example, is let's say you have a Roth IRA, right? A Roth IRA has certain tax benefits that if you've contributed up to a certain cap each year, then the gains on that in any given year are earned tax-free, and when eventually you cash that out in the US isn't going to tax you on the gains for that, right? But that only applies in the US. So Israel might still tax you on the gains if it's beyond your 10-year tax holiday. So let's say you're cashing out your Roth IRA or your 401k more than 10 years after you made Aliyah. So the 10-year tax holiday on foreign earned income no longer applies. And if you are a resident of Israel at the time you cash that out. That's a lot of my understanding, at least, on a lot of these different tax issues. I definitely recommend having an accountant and don't just simply rely on my information. But in any case, if you enjoyed this video, please let me know by hitting the like button down below. I'm not going to ask you to subscribe or to comment down below. All I'm really going to ask you to do is just hit the like button because it helps out my channel so much with the YouTube algorithm, and I truly appreciate it. Thank you guys all so much for watching. Catch you in the next one.